please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and good morning and welcome to Power Breakfast in the Mumbai News Center. I am Anisha Jain and with me is Nigel D'Souza. Good morning, Nigel.
Morning, Anisha. I think we've got plenty to discuss, global and domestic as well. So let's kickstart the show with all the top stories.
Well, yes, let's start off the show with top headlines then. Federal Reserve reinforced expectations for a December rate hike by subtly upgrading the assessment of the U.S. economy a day before President Donald Trump plans to unveil his choice to lead the U.S. Central Bank.
And the U.S. markets closed mostly high after the Federal Reserve kept interest rates unchanged. The Asian markets take a bit of a breather this morning. The SGX Nifty is indicating a bit of a subdued start.
Hero Motor operating margins beat estimates, also post highest ever quarterly sales. Cognizant reports a strong quarter and raises the lower end of its guidance on stronger growth for digital business.
And in key earnings to watch today, Vedanta is likely to benefit from volume ramp-up as well as commodity price surge. Power Grid seen posting a steady quarter. Watch out for capitalization. For Glenmark, on the other hand, is likely to post a subdued quarter as its drug Zetia's exclusivity
could lead to the failure of the deal.
And footwear maker Khadim India is going to open its 543 crore initial public offering for subscription today with a price band of 745 to around 750 rupees per share. Well, the Asian markets have opened up, so let's take a bit of a quick check over there. They're taking a bit of a breather after Wall Street posted a more or less mixed session. Investors also digested the Federal Reserve's decision to keep interest rates steady as we speak.
Higher after the Federal Reserve kept interest rates unchanged. The S&P 500 finished around 0.1% higher, while the Dow was up around 57 points at close. The Nasdaq Composite underperformed slightly. Now that one slid around 0.2% because the Apple share declined more than 1.3%. In economic news, the U.S. private sector added 235,000 jobs in October, slightly better than what the street was expecting. But now let's get across to Hampton Pearson, who gets us a wrap of all the action on Wall Street.
Investors keeping their eyes on headlines from both the Fed and the economy. Janet Yellen and her fellow monetary policymakers kept key short-term interest rates unchanged and issued a statement that characterized economic growth as solid, downplaying the impact of the two hurricanes. Most Fed watchers feel it's a green light for a rate hike in December. Backing up the Fed's prediction of solid economic growth, several key data points. Ahead of Friday's government jobs report, a closely watched survey of private sector employment increased by 235,000 jobs in October. Payroll processor ADP says the gain was the largest in 7 months, and construction firms led the way. And it appears the hurricane recovery was a key factor in an October surprise increase in auto sales. There was also strong demand from rental car companies and strong truck and SUV sales, offsetting lower car sales. Mixed signals, however, from manufacturing. Overall, the sector is still healthy, but factories grew more slowly last month. That's the headline from the latest survey from the Institute for Supply Management. The closely watched Purchasing Managers Index dipped to 58.7 in October from a 13-year high of 60.8 in September. Anything above 50 means expansion. And finally, the wait is almost over. On Thursday afternoon, President Donald Trump is set to announce his choice as the next chairman of the Federal Reserve. After markets close, the Wall Street Journal reporting the president has in fact notified Fed Governor Jerome Powell, who, by the way, was appointed by President Barack Obama, he will be the president's choice. That news breaking a little over an hour ago. CNBC has not independently confirmed that report, but we'll know soon enough later on Thursday.
Okay, and the Federal Reserve upgraded its assessment of U.S. growth and left rates unchanged at 1 to 1.25%, keeping the central bank on track for a December rate hike. Economic activity was described as solid for the first time since January 2015. Now remember, this is a meeting at which the two most recent GDP figure policymakers had seen showed growth of 4.6 and 5.2%.
Well, the real Fed decision comes later today when U.S. President Donald Trump will announce his pick to lead the central bank. Trump said that Chair Janet Yellen is excellent, but that doesn't look like it's enough to get him to reappoint her. Sources suggest that the president plans to nominate current Governor Jerome Powell as her replacement. CNBC's Steve Leisman gets us more details.
His pick for Fed chair, and it will be, so they say, Fed Governor Jerome or Jay Powell. The 64-year-old native of Washington, D.C., is a Republican appointed to the Fed in 2012 by President Obama. At the Fed, he's overseen some changes, intricate changes to markets in the wake of the financial crisis, and after Dan Tarullo left, financial regulation as well. He's a former partner at the private equity firm Carlyle Group, where he amassed a small fortune that would make him one of the richest Fed chairs ever. Now, he largely favors the existing post-crisis financial regulation framework, but has said he's in favor of rolling some of them back. Here's what he said about some other key monetary policy issues over the years.
While monetary policy can contribute to growth by supporting a durable expansion in a context of price stability, it cannot reliably affect the long-run sustainable level of growth.
Inflation is a little bit below target, and it's kind of a mystery. You would have expected, given how that we're getting tighter labor markets, that you'd have a little bit higher inflation. I think what that gives us is the ability to be patient.
We don't have a perspective on the right level of the dollar. We sort of take the dollar as an exogenous element that comes into our forecast. That's what we do. So we don't talk about that. It's not our job. We try to stick to our knitting, and that's the level of the dollar relative to Chinese currency would be the definition of something that's not our knitting.
Powell has generally broken with Republican Fed critics in calling the Fed's policies after the crisis a success. That is, he calls them a success. And a big difference between Powell and Fed Chair Janet Yellen, Powell's not an economist, and it's unclear who the number two will be at the Fed, how much that matters for monetary policy.
Well, turning attention to Europe then, markets jumped to their highest levels in more than 2 years, with the German shares on course for a new record as investor sentiment was buoyed by a slew of corporate earnings. That explains why, in fact, the DAX was the big outperformer yesterday. It was up close to around 1.5%. Commodity shares were among the strongest performers in yesterday's trading session. But the FTSE, that was a relative underperformer in trade yesterday. We'll get back to that. But just take a quick check on the emerging markets. Well, in yesterday's trade, it was more or less mixed. You had the Brazilian index that was down close to around 0.5%. The Russian index was up more than 1%. But talking about the FTSE underperforming, the Bank of England is widely expected to deliver its first rate hike in a decade later today, despite the overhang of the Brexit uncertainty. Now, the pound's plunge has fueled a pickup in inflation, while the nation's longer-term growth outlook has dimmed. The British Chamber of Commerce has urged the central bank to hold off a rate hike for now, joining a chorus of commentators who fear monetary tightening would constitute a policy mistake. At the bank's last meeting, two monetary policy makers dissented in favor of higher rates.
Okay, then let's shift focus to the currency space then. The dollar hovers near 3-month high versus the yen as investor optimism about the greenback rose ahead of major announcements on U.S. fiscal and monetary policy after strong economic data.
Okay, then turning attention to the world of commodities, and crude oil prices held steady as U.S. crude inventories fell despite a rise in production, while outside the United States, an OPEC-led supply cut continued to strengthen the market, and that explains why Brent crude prices continue to hold about that $60.50 per barrel.
Okay, and from the precious metal space, gold prices held on to gains early after the U.S. Federal Reserve left interest rates unchanged, and as investors await an announcement on a new chair for the central bank later in the day. Well, back home on the Wall Street, the Nifty and Sensex end at record closing highs yet again. Both indices gained over 1% each. From the broader markets, the mid-caps rallied 0.5%. However, it was the Bank Nifty that really outperformed, rallying close to 2% yesterday. But how are the cues stacked up for the day today? Ekta joins us to tell us more. Good morning, Ekta. Over to you.
Hi, morning. Well, I do expect the Nifty to probably consolidate in today's trading session. And the reason why is that basically we had a very strong trading session yesterday. The Nifty was above 10,400, record highs for all indices. Bank Nifty outperformed, the advanced decline was steady. And the market seemed to be buoyed yesterday by what was happening in terms of global cues, select earnings back home, as well as hopes of maybe a bank reform continuing, though ICICI Bank and HDFC Bank were, the key contributors in terms of gains. It seems as though the markets are shrugging off all of the negative news. So we have, despite the fact that Brent, which is at 2-year highs, or maybe even the pricing probe on the pharma companies that came out in terms of news yesterday, there was absolutely no reaction as compared to what it was in December of 2016. But what really stood out in terms of a cue was that the FII's net bought in cash. So the FII's net buy figure was 1,038 crores. I think it is after continuous selling in the month of October, I think over to the tune of around 7,000 odd crores. But we all know that the trend has been FII selling and DII's buying. But that seemed to have reversed in yesterday's trading session. So that seems to be a little bit of an incremental sentiment positive that no, we don't only need to depend on the DIIs. Maybe the FIIs, who have traditionally always supported in terms of liquidity, are probably coming back. But obviously sustainability would be key in terms of assessing that. In terms of cues today, the US Fed decision on monetary policy, rates unchanged, and the Fed is likely to raise rates in December. So that was largely expected. The decision on the Fed chair will be announced on Thursday afternoon US time. So that'll be an important thing to watch out for. Asia is, the SGX is currently indicating that it is going to probably be a little bit of a slowish start for us. And Asia too is a bit consolidatory this morning, as you can see. Earnings post-market, we had Hero MotoCorp, which is going to be reacting to its numbers. And in terms of results today, it's quite a heavy day for the broader markets as compared to, large cap earnings. From the real large caps, we have Power Grid at Vedanta. But from the broader markets, it's Berger Paints, Glenmark, Natco, Ujjivan, Shriram City Union Finance, Cera Sanitaryware, Akzo Nobel, just to name a few. So it's always going to be an exciting time to watch out for in terms of earnings today.
All right, Ekta. So quite a few stocks you've already given us. Give us a few more stocks and news today.
Okay, well, I already spoke about Hero MotoCorp, but that's going to be in focus, where the net profit was 1,010 crores versus a poll of around 1,035 crores. Cognizant has revised its lower end CY guidance upwards. They also met their Q3 numbers in terms of guidance. So maybe there could be a bit of a trickle on IT stocks. It's just something that you should be cognizant of. But TVS Motors total sales was a little below our poll, 3.17 lakh units. Hexaware, the net profit was better than our expectations. Camlin Fine Sciences is a loss versus a profit on a year-on-year basis. Mahindra Holidays, profit is up around 4% Apollo Tyres, where the profit was below expectations. Max India, where there was a net profit of around 2. The figure was 1,038 crores. I think it is after continuous selling in the month of October, I think over to the tune of around 7,000 odd crores. But we all know that the trend has been FII selling and DII's buying. But that seemed to have reversed in yesterday's trading session. So that seems to be a little bit of an incremental sentiment positive that no, we don't only need to depend on the DIIs. Maybe the FIIs, who have traditionally always supported in terms of liquidity, are probably coming back. But obviously sustainability would be key in terms of assessing that. In terms of cues today, the US Fed decision on monetary policy, rates unchanged, and the Fed is likely to raise rates in December. So that was largely expected. The decision on the Fed chair will be announced on Thursday afternoon US time. So that'll be an important thing to watch out for. Asia is, the SGX is currently indicating that it is going to probably be a little bit of a slowish start for us. And Asia too is a bit consolidatory this morning, as you can see. Earnings post-market, we had Hero MotoCorp, which is going to be reacting to its numbers. And in terms of results today, it's quite a heavy day for the broader markets as compared to, large cap earnings. From the real large caps, we have Power Grid at Vedanta. But from the broader markets, it's Berger Paints, Glenmark, Natco, Ujjivan, Shriram City Union Finance, Serra Sanitary Ware, Akzo Nobel, just to name a few. So it's always going to be an exciting time to watch out for in terms of earnings today.
All right, Ekta. So quite a few stocks you've already given us. Give us a few more stocks and news today.
Okay, well, I already spoke about Hero MotoCorp, but that's going to be in focus, where the net profit was 1,010 crores versus a poll of around 1,035 crores. Cognizant has revised its lower end CY guidance upwards. They also met their Q3 numbers in terms of guidance. So maybe there could be a bit of a trickle on IT stocks. It's just something that you should be cognizant of. But TVS Motors total sales was a little below our poll, 3.17 lakh units. Hexaware, the net profit was better than our expectations. Camlin Fine Sciences is a loss versus a profit on a year-on-year basis. Mahindra Holidays, profit is up around 4% odd. Apollo Tyres, where the profit was below expectations. Max India, where there was a net profit of around 2.1 crores. And there will be numbers from ENIL, TCI Express, Apar Industries, ABC Bearing, eClerx, Subros. All of them will be reacting to numbers. Solar Industries has won a contract worth around 1,143 crores, so watch out for that. Finance Ministry said yesterday that the government has formed an alternative mechanism for consolidation of state-run banks, and there is the likes of Piyush Goyal, who will be a part of that committee, as well as Nirmala Sitharaman. So that will be important to watch out for. And lastly, ICICI Bank is going to consider domestic fundraising via bonds on a private placement basis on Monday. Just something that you should keep on your radar.
It's in the right place and has the right opportunities. That's the word that's coming in from Gautam Singhania of Raymond. Now, an exclusive chat with CNBC TV18's Varinder Bansal. He also said that they are hopeful of a double-digit margin growth over the next 3 to around 4 years. Here's an excerpt of that conversation in our special series, CNBC TV18 Checks In. Let's take a look.
Raymond is made up of many parts.
Yes.
It's got textiles, it's got apparel, it's got B2C fabrics, it's got engineering, auto components, FMCG. Every part of it has its own challenges and its own needs, desires, strategies, whatever you call it. If you talk specifically about the textile apparel, we now look at the textile apparel as one integrated piece.
Yes.
Fabric obviously is our solid business, which is legacy business. Apparel is growing strongly for us. We have 4 strong brands now.
Yes.
Raymond, Park Avenue, Parks, and Color Plus. If you see, Raymond is growing very, very strongly now on high double-digit growths. Park Avenue is a market leader in its space. Park Avenue has been able to enter the FMCG space, which nobody's been able to do. So there are a lot of opportunities.
So what do you think is the focus, or could be the focus for Raymond's going ahead? As you said, there is so much in Raymond's right now.
Like I said, every business has its own strategy.
But at least 2 or 3 things which is going in your mind now with all that power with you.
I think the number one priority for me is to see exponential shareholder return. Because that's my best benchmark.
How that can come?
It will come by doing the right things.
Yes.
I think Raymond today is a solid brand in the right place, in the right country, with the right opportunities. I think India is going places. As consumption grows, demand grows, as the economy picks up, you are today the best fabric brand in the country, probably in the world.
Undoubtedly.
Okay.
Still in marriages, if people say something, it is Raymond's,
Yeah. And that's a very powerful position to be in.
It is.
There's no second brand.
You grew around 5-6% compounded annual growth rate in the last 3-4 years. Do you see that changing now?
I certainly see more opportunity. See, when you build a building, you have to put a foundation into place. I think the foundation is in place.
So you see double-digit growth for the entire consolidated company. Will drill down to companies.
I would hope to. But like I said, the environment is changing also quite rapidly.
It is.
So a lot of things are happening. Yes, a 10-12% growth is something I would wish for. And I hope it should happen.
You know, the quarter two gave us a glimpse of how the margins are improving, how the operational efficiencies are playing in Raymond's. You know, you are 5,500 crores, you know, company via sales, but the margins don't come into, you know, to the bottom line, which everyone wants to see. Do you see that changing, that going to 8-10%?
I think what you said importantly is you see the last 4 quarters, 6 quarters, 8 quarters.
Exactly.
I think you see every quarter there's an improvement. So that is the most important thing. The trend is in the right direction.
It is.
Number 2, we're not looking short term. We're looking long term.
I talk about 2-3 years.
Yeah, so we're looking long term. So also top line is growing, the margins will come. Because we're doing the right things.
Do you expect double-digit margins in 2-3 years?
Again, I don't want to give a guidance on margins for 3 years.
Are you hopeful of that? Not a guidance?
Hopeful. Yes, I am hopeful.
And you can catch more of this candid chat on the company's growth outlook, future strategies all through the day only on CNBC TV18. Mahindra has reported a good set of numbers for its second quarter. The dollar revenue beat street estimates with a 3.5% jump, but the real kicker actually came in on the EBIT margin front that expanded to 11% this quarter. CNBC TV18's Kritika Saxena actually caught up with the management, and they believe that the company will see growth in both their communication as well as the North America business. Listen in.
It depends on how you define communication. If you're talking of telecom per se, yes, we do expect there will be a marginal increase as we go forward.
In the next 2 quarters?
Yeah, but in so far as communication, because there is no vector of the economy which can do without communication.
Okay, fair enough. What about North America, Vineet? North America headwinds have been clear in the last couple of quarters. By when do we expect stability in terms of discretionary spending from North America, from US?
Well, the North American economy is doing well. I think you will see its impacts in time which comes. But by and large, I think we are quite happy with what's happening in North America, and our growth there has been pretty decent.
So by when do you expect that to translate into a spending uptick for IT companies, for Tech Mahindra? Is Q4
No, look, we are pretty positive going forward this year, despite all the political uncertainties, whether it's Brexit in here or what is happening in the US and elsewhere. But politics is separating from business. It would seem.
Yeah, that's true.
And IT, especially the changes which are coming about, I do suspect will continue to make this sector, I won't use the word buoyant, but at least it will move up.
Well, another IT major, Cognizant, has also delivered a strong set of numbers for the third quarter. Cognizant's revenues jumped to around $3.7 billion, while its net profit came in at $495 million. The company has also revised the lower end of its guidance. Here's a word coming in from their management.
We are again raising the low end of our revenue guidance range and expect full year revenue to be in the range of $14.78 billion and $14.84 billion. And we expect our full year 2017 non-GAAP operating margin to be at least 19.6%.
Okay, and from the auto space, the two-wheeler major Hero Motor has reported profit growth of around 0.6%, backed by volume growth and operational performance. Margins beat is the key positive. Naveen joins us to take us through the earnings fine print. Good morning, Naveen. Tell us more. What, apart from margin, really stood out for you?
So you clearly pointed out the biggest takeaway from the numbers would be the margins. But remember a few more things. I'll begin with the top line first. The revenue, that jumped by close to 6%. We were expecting a revenue jump of close to 12%. But if the company came out with a release saying that if not for the Haridwar GST plant adjustment with relation to GST, the revenues would have been 11.5%. But that would have been in line. But the clear beat was the margins. Remember, we were expecting a margin growth of almost 16.5%. But the EBITDA margins came in at 17.2%. 29.4%. Why? Two things. One, although the gross margins have fallen by 200 basis points at 31%, but the other expenses, if you see the ratio of other expenses to sales, that has reduced from 11.5% to close to 9.5%. So that has been one of the key reasons why your margin sees a jump. On the other hand, PAT has been more or less in line, an uptake of close to 1% at 1,010 crore. Also, the management spoke about going ahead in second half of FY18. We will be seeing the demand sustaining, but there will be some bit of a pressure in the margins on the back of higher other expenses. But if you see in terms of, if I pull up the volume chart, also the volume has been increasing steadily for the company, and also the margins. This is one of the highest margins in the last 2 to 3 quarters. So in that way, good going for Hero. I expect the stock to be in green in today's trade.
Thanks so much for that, Naveen. Well, JSW Energy's deal to acquire JSPL's Thamra thermal plant in Chhattisgarh may get derailed. That's the word that's coming in from JSW Energy's MD, Prashant Jain. He said that JSPL's inability to secure necessary approvals could lead to the failure of the deal.
The closing date for the transaction is June 2018, and both the companies are committed, but I don't think it will be going through, because I'm a bit skeptical, because the necessary approvals have not been secured by JSPL so far.
Power Breakfast on CNBC TV18. Well, we're talking about earnings then, and the big number to expect today would be Power Grid. It's reporting its second quarter numbers. Anisha, take us through. What do we expect from there?
Well, it's usually steady is the word coming in for Power Grid, and this time around as well, that is what we're expecting. In terms of the revenue, we're expecting it to jump up by around 17%. The margins are seen steady at around 87% mark, but remember, margins are not really that important for Power Grid. People do watch out of what is happening in ROE and ROC of the business. In terms of profit after tax, that is expected to jump up by around 14% to 2,135 crores. Now, the key thing for Power Grid actually remains of what happens in terms of capitalization as well as commercialization, because remember, the company has been very aggressive of what's happening in the capitalization for the last few quarters. This time around, the expectation is a bit wide. 3,500 to 6,000 crores is what we are hearing, but I think the street will take it with a pinch of salt, because the annual target still remains on track. Remember, 3 large projects have been commercialized in the quarter gone by, so that should add up to the revenue. The transmission revenue is expected to grow by 16%, but consultancy, which is a smaller business, has more scalability, and that is expected to grow faster. Lastly, just a few things that we will want to hear from the management. They had been talking about the EV infrastructure. Any word on that? The targets for the year, whether they maintain their capex as well as commercialization target. And lastly, what is happening on the InvIT front? Is there any plan going on in that regard? And how they're faring well against the TBCB projects that they are bidding for. So, Nigel, overall, we are expecting a steady quarter from Power Grid. Let's see what they come across. Just the stock is going a tad bit weaker into their earnings.
Okay, all right, Anisha, thanks so much for that. Well, Glenmark, that's going to be the other big number that we're going to be expecting today. Subdued performance is what we're expecting. Ekta's back with us. Ekta, what do we expect there?
Well, you know, for Glenmark, last quarter was quite a good quarter, and that was because they had Zetia generic, which really contributed to the US business. Now, remember that they also repaid some amount of debt, around 300 crores of debt last quarter, on account of the good Zetia revenues that they had generated in the US markets. So for this quarter, we're expecting that to come off. So Zetia is not going to contribute that much as it did last quarter. For example, the revenue is expected to grow around 2% according to estimates, and the margin should probably come in at around 17% versus 20% with a profit decline of around 19%. Now, the reason for that is obviously because of the pricing pressure which is going to be felt in the US market. So that's the primary reason why we're going to see that decline come through. India could probably continue growing. India was actually one of the, Glenmark was one of the few markets or one of the few companies which grew despite the GST disruption last quarter. India was up 15%. So they have a very good India portfolio, a lot of dermatology products, etc. And hence that is expected to continue in terms of momentum. In terms of a couple of other things to watch out for, I would be closely watching out for what happens with their interest costs, with their debt, simply because the the same time, because last quarter they had guided that, yes, while debt has come down by 300 crores, we expect it to rise up again by the end of the fiscal. So hence, that would be something that would be closely watched in terms of maybe guidance as well as trajectory. So overall, it'll probably be the same story playing out for Glenmark as for other companies, but India should outperform for them.
Okay, Ekta, thank you for that. But Nigel, tell us about Vedanta. That too reports numbers today.
Well, that's right, Anisha. We should get the expectations up for you on the screen. On the top line, we're expecting a good growth of around 25% approximately. The operating profit as well, so jump by around 40 to around 45%. And margin expansion is what we're working with. The net profit we're working with is at around 2,200 crores. Remember, there's a very wide...
I'm pleased to say that I am joined now by Raghuram Rajan, the former RBI governor, of course, but also a professor for finance at Chicago Booth. And Raghuram, thank you for your time, for joining us today on CNBC. And a lot of speculation over the next Fed chairman. You may have seen the report in Barron's magazine saying that you would be their candidate to take the post. So let's just clear the air. Did you get a call from the Oval Office?
Yeah. No, I didn't. And there's not a chance that that would happen.
So let's talk about the market odds-on favorite at the moment. Seems to be Jay Powell. Is your assumption that he will take the post? And if so, what kind of Fed will this look like under Jay Powell?
Well, first, I don't have any more information than what's being discussed out there. If it is Jay Powell, what I hear is, he's somebody who assembles opinions together, takes a reasoned view, moves ahead. He's a consensus person. From Fed insiders, they think very highly of him. I think regardless of the choice, however, the Fed is like a supertanker. It doesn't turn on a dime. So whoever comes in, whether it's, the usual names, John Taylor or somebody else, or whether it's Janet Yellen continuing, it's hard to imagine the Fed moving off from what it's already doing. A Fed chairman takes years, even if they have strong opinions which differ from the prevailing wisdom at the Fed, to change people's opinions there. So my sense is we should expect continuity.
And what are the prospects that we get someone like John Taylor in the vice chair role? Because the market, when you look at their reaction and the Treasury yields, they seem to think he will bring in a much more hawkish policy. But nevertheless, you're saying it's going to be data dependent, with the Fed still trying to crack this inflation puzzle.
If John Taylor comes in, he's one amongst a number of people, and he's also quite reasonable. He understands the kind of job he has and what he has to do to move people's opinions. It's not this is my way or the highway. It is, how do we think about this? He has to convince others. So I think all the talk about, different candidates moving the Fed significantly off course is probably overstated in the short run. In the medium term, of course, they will have very different Feds depending on who's there in the chairman or the vice chairman position.
If the Fed is a supertanker, as you suggest, are they moving in the right direction?
I think yes. I think the Fed is exiting from the extremely accommodative conditions. And the question one should be asking is, if not now, when? There is always a danger that they move too fast. But I think at this point, there's an equal danger that they move too slowly. Right. And so if you've got critics on both sides, you're typically moving at the right pace.
And the reason some say there's a danger of moving too slowly is the risk in financial stability. Are you concerned about those risks now?
Well, I think before you get to financial stability, there is a risk that, as we see labor markets tighten, it is possible that we get an inflation signal which is not acceptable to the markets, which looks stronger than we've had so far. If that happens, in the sense the Fed is not moving in a measured way, then perhaps the market will anticipate stronger, faster movement by the Fed, and that could be as damaging to financial markets as the Fed moving too fast. So being behind the curve and being seen to be behind the curve could be problematic. There's also the concern, as you correctly put it, that inflation is the first concern, but there is a second concern of financial stability. If the Fed stays too low for too long, do those risks build up?
And what about the implications here for inequality? Because we were just having a discussion off camera. One of the big topics here are this politics of rage. Some of that is driven by inequality, by the gap and the divide we're seeing. Do you think that quantitative easing has fueled that in some ways?
I don't think it's been a big factor. But I do think that when the Fed comes in and over time follows a set of policies, it's favoring one set of people versus the other. Interest rates in the normal course do that, but they also move up and down, and so they balance out. When it moves in one direction over a long period, people start asking questions. For example, in Germany, there are questions about whether savers are being disadvantaged relative to borrowers by ECB policy. So I think these questions are natural, but for the central bank to be at the center of questions which really belong in the political sphere, do you favor these guys or favor those guys, I think is problematic.
Let's talk about India for a minute, because big news on the bank recapitalizations there. We've seen some rather bullish forecasts on what this could mean for growth in India. What is your assessment?
I think this is good news. I think it's important that the banks have the capital to be able to lend going forward. And the public sector banking system is a big part of the Indian system. It's about 70% still. More important, it allows them to take tough decisions on cleaning up their balance sheet, which they couldn't earlier because they had more limited capital. So I think this is good. The government should be clean about it. We are putting our resources behind the banks and move forward.
Is it necessary but also sufficient, or does more need to be done in the way of reform as well?
I think more needs to be done in the way of reform over time. I think we have to think about the governance of the public sector banks and how that can be improved. And there are various options there. But I think for the immediate future, it's important to clean up bank balance sheets so that the healthier the balance sheets are, the healthier the projects that have been restructured with the appropriate debt, the stronger the economy can grow.
And also in the Indian economy, many looking to the one-year anniversary really of demonetization going into force. What is your assessment of the impact we've seen so far? Do you think the country's about to turn a corner?
Well, I think it did affect economic activity, and economic activity slowed down. There have been other factors like the goods and services tax which came in. The goods and services tax, in my view, is long-run positive. And there were always going to be glitches in implementing it. But going forward, these three, fixing the debt, the impact of demonetization waning, and the goods and services tax, fixing that and figuring out how to work it in a low-cost environment, will be growth positive for India.
So was demonetization worth the short-term pain?
I think we still don't know enough about it, and I suspect there's been a fair amount of distress in the informal sector, and I mean, those kinds of calculations are more political than economic.